It's options expiration week. Is that going to lead to a market correction? We'll talk about that now. This week is options expiration week, and going back in history at the market over the course of the last year in particular, each one of these declines that we have seen over the last year has all aligned with options expiration week. Does that mean that we're going to have another big correction this week? Well, who knows? But there's a couple of interesting things that are going on right now. First of all, you have a record number of call options out, mostly by retail traders. Those options contracts all have to be rolled over this week. That could apply some pressure to prices. Now, with our money flow indicator still negative at this point and the MACD now in place on a sell signal, that does suggest that prices are going to remain under pressure a tad here this week. Again, we're not looking for a big correction here, but a bit of a sell-off here, even back to the 50-day moving average, could certainly provide a much better entry opportunity to put money to work. And of course, we recently took a little bit of profit last week here, just reduced some of our overbought, really extended positions. But now we're looking for an opportunity potentially getting into the next month to get that money put back to work for the end of the year seasonal kind of Santa Claus rally. A couple of things coming up here, though, over the next couple of weeks. Not only do we have options expiration this week, and again, it doesn't mean the markets are going to decline sharply, but every previous time we've had options expiration, we've seen minimal declines back to the 50 or the 20-day moving average. Right now, that's about a 3% decline from where we are now. Again, we may not see that much, but then once we move into the first 2 weeks of December, we have mutual fund distributions. And typically, historically speaking, the first 2 weeks of December also tend to be a little bit weak because of that distribution. Now, any pullback here will certainly set the markets up for an end-of-the-year Santa Claus rally because mutual fund managers, pension fund managers, hedge funds, they all want to be fully allocated into the end of the year when they report earnings. The market's up about 25% for the year. A lot of managers behind the curve at this point, needing to play catch up. So again, they don't want to finish this year behind the curve and underweight equities. So again, there's a good setup here for the last 2 weeks of September for that traditional Santa Claus rally. In the near term, keep a watch on these signals. The sell signals are still in place. When they reverse, that'll be a much better entry opportunity at whatever point that is to put some more capital back to work. Again, don't be overly underweight equities, but again, a little bit of reduction here for the next few days, particularly as we get through options expiration week, get through this week in particular, and of course, a very light trading week next week because of the Thanksgiving holiday. The odds of success are going to be a lot more in your favor. I'm your host, Lance Roberts, for 3 Minutes on Markets and Money. See you back here tomorrow.